Good morning, everyone, and welcome to the On Time, On Target Morning Brief, where we invest in fighter pilot precision on a daily basis. Today is going to be a day to watch in the market. Very exciting because I think today is going to tell us a lot about what we're going to see in the next few weeks. So two things are going on. We are all set up for a buy the dip, rip your face off, fry yay, huge move up like we had on Monday. We are completely set up for that. However, we have a lot of good things. We have stimulus that's getting ready to get signed. We also have good jobs number yesterday and this morning. So all of that is going well, except for this morning, interest rates spiked again. And when you think spiked, it's like, okay, that's a little bit of a crazy term. That's like when people say, why is the market crashing? Well, okay, the spike we're talking about is 15 basis points in the 10-year. So that's 0.15%. That's not really what anybody would call a spike, but since interest rates are so low, it seems like a spike, and it takes us back up to that 1.6% level in the 10-year, which has been problematic and kind of caused some of the selling. So we've got that force saying sell, 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 sell. Today we've got another force saying buy it up. We're in a correction in the NASDAQ. So that's what we're going to talk about today, is which forces are going to win out. We're also going to talk a little bit about philosophy today. So you need to think about yourself. If you think to yourself, if you're a long-term investor, do corrections happen in the market? Yes. Will they happen in your investing lifetime? 20, 30, 40, 50, 60 years, depending on, some of the younger folks in the room, 70, 80 years of runway. Are you going to see a correction? Yeah, we see a correction on average more than once a year. Are we going to see a bear market again? That's selling off 20%. Yeah, absolutely. We see one heinous bear market every decade. Good news, we already had ours. It was last year. A year ago, people are starting to waffle and second guess their investing decisions based off of the NASDAQ selling off 10%, which is normal, especially after you've made so much money. And I'll show you those charts here in a second. But we had to sell off 35% last year. 2018, we had a 20% sell off in 1 month. It was 19.7, so it didn't qualify as a bear market. But yeah, right. So this is not uncommon what's going on right now. These are emotions of the ocean, if you will. Tech has run up insane. We've made a ton of money, and now it's coming in a little bit. Breathe is what I would tell you. But you need to just think that it's going to happen. And for the folks out there, high fives to the folks out there that put money in last night saying, are you going to buy tomorrow? And I'm like, I bought at the end of yesterday. So I was buying late Thursday in anticipation of a rip your face off Friday. We'll see. It could go either way today. I'm telling you, I would not want to make a call on today's market whatsoever. But I did buy a bunch yesterday, so I'm kind of hoping it goes back up. But you know what? If it goes down, I'll buy more today. So, but for investors that are calling me when the phone rings saying, hey, it's now a good time to wire in some money. It's like, well, yeah, this is the sell-off. We always want stocks cheaper. Apple's cheap. Amazon's cheap, in my opinion. These are opinions. Salesforce, we're going to talk about clean energy today. That stuff has a lot more attractive entry point than we've had in a while. So those are the things we're going to talk about today. Long on the intro. Sorry about that. If you're catching us on a replay, thank you so much. Subscribe, hit the notifications. If you want to join us live, it's $25 a month to come in the room. You have a chat window and a Q&A window that you don't see. And with that, let's get started. All right, welcome back, everyone. Get over to our lineup card and take a look at what we're going to talk about today. Or you can see at the top there, make sure you have your Q&A window open and your chat window open. with your call sign set to all attendees. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence for acting upon anything you hear this morning. A full disclaimer information is available at ototnow.com. All right, welcome to our mission objectives, March 5th, 2021. Grow our money, protect our money, and live off our money. We're going to talk about buying the dip today. I should have updated this earlier, but yeah. How about what's better is, will the selling ever stop, right? And then for our, what did I have up there? Oh, interest rate. What is interest rate risk is what we're going to do for our question of the day. All right, so that's what we're going to talk about today. Just zoom back out here, zoom out, not going to zoom out. So we will do it the hard way. All right, flow, long, short, open, short, long. We're going to do a market review, headline review. We're going to talk about our long-term investments, which are not Twitter. We're going to talk about Apple, the ones I talked about in the open: Apple, Amazon, Salesforce.com, clean energy. We're going to talk about infrastructure and Palantir. Those are the names we're going to take a look at. And then contingencies and academic resources are standard. Okay, let's take a look at what's important, like I talked about earlier when I talked about philosophy, is taking a look, keeping the bigger picture in mind. So when I say things like, are stocks going to go down again in your lifetime? Yeah, everybody's like, yeah. Are they going to correct? Yes, probably once a year, a little more than. Are we going to have bear markets? Yeah, we do. We don't know when. They're notoriously unpredictable. Otherwise, everybody'd be rich, right? But yeah, you don't know when it's coming. You don't know why it's coming. There are some indicators out there, and there's some smart things you can do. But bottom line, you don't have a crystal ball on this stuff, but they are going to happen. So when they happen, know your game plan going in. If you, just like you launched on a combat sortie, you take off, you are prepared for several contingencies. What if my wingman gets hit and blows up right next to me? What if I get hit? What if I get shot down? What if I miss my targets? What if I'm a buffoon and don't drop over my primary target? Do I have secondary and tertiary targets to service? What if I get recalled? What if I have to divert because the base I took off from blew up? You know what? You talk about all these stuff all the time. So, hey, put your investing hat on and think to yourself, what's going to go wrong? Yeah, you'll have corrections. So what do I do during a correction? If you're a total return investor, which most of you are, unless you're in stages of retirement and living off your portfolio, that's a little different. But if you're I'm building wealth, total return investor, you're going to largely stay invested. I will say you have to get out of anything speculative you no longer believe in. If you've lost belief in it, lost your conviction, you have to sell. I don't care if you're up, you're down, doesn't matter where you bought it. If you lost conviction in one of your names, you have to sell it going into a downturn, right? We talk about when's the time to get off the roller coaster. Well, the time's at the top when it starts down. 5 to 8% is kind of that point. I would say, even though NASDAQ's in a correction, it touched 10% yesterday. Looks like we're going to bounce out of it today, but we'll see. But if things continue down, now's a good time. You have to go through the portfolio, clean out the speculative stuff, the dreams, the company you never heard of, or you saw in a newsletter, or you saw on TV. You get rid of the crap and load up on quality, right? The stocks you want to own for a decade, 2 decades, 4 decades. You're picking best of breed out there. You can hold that stuff through. I don't care. Apple's at 120 right now. If it went down to $50, I would not like it. I would probably go sit in a dark room for a little while. But once I got over that and became one with the new share price, I would buy the crap out of it because it's going to bounce. That's the way you have to kind of look at those things. So be prepared mentally for these things that happen. And then that way, when they happen, it's kind of no big deal. So let's go to our chart here again. This is the SPY. This is not the NASDAQ. The SPY is not in a correction yet. As you can see, we did break out of this channel. It left the channel there, but it stopped, continuing it, if you will. So we are 3 days down. Remember, that's generally when you get the big bounce, or the 3 days up is when you get the big sell-off. A lot of people trade off of that. Had 3 down days. And then here we are. But when you really look at where were we here last? Yeah, middle of December. Wasn't that long ago, right? It's not like, we're down here, right? So last June, we're at 300. Now we're at 375. Quick math tells me that's 25% higher. So if I was talking to you on June, whatever day that is, 15th, and I said, hey, we're going to be 25% higher in 9 months. You cool with that? And you'd be like, yeah, high fives. Boom, boom, boom. But then when you see how we got here, you're like, wait, I'm losing so much money. No, you're not. Okay. You made 25% in 9 months. If you're trying to make more than that, well, just if you're crying about this, then you're being greedy. Right? That's like going into a casino, and I don't like casino analogies, but if you go into a casino, you win $5,000 and then you lose 300. Don't cry to your friends about how you're down 300 bucks. Literally, they will have no sympathy for you, and you might not have any friends if you keep thinking that way. All right, let's look at the SPY the last 5 days. So here was your rip your face off Monday. So flat Friday last week, and then boom, there it is. And then 3 down days, and we're set up for this move. I will say this was Powell talking yesterday. This big sell-off. I didn't like the choice of words, and neither did anybody else. He goes, yeah, you could see some small inflation as the economy opens up. Okay, that's like one phrase out of 30-minute testimony, and everybody globs onto that. Wish he wouldn't have said that, because there went from 384 down to 372 while he said that. But then people kind of said, well, the rest of the time he's saying interest rates can't go higher. Really, for three years, I say 10 years. Again, we'll talk about that more in a second. But you see the market's moving up pretty well into the green today. We shall see, and we'll set up here for a minute in our, in our day trading stuff here in a minute. Okay, let's take a look around the world real quick. There's our pre-market futures. We will refresh those. Up over 1% across the board. Europe is mixed. Asia is down, but not much. There's our big fat red numbers from yesterday. Bonds, there's 1.62 is what I saw earlier, so it's faded from that a little bit. Oil's stabilized and going higher from 60 and above. Again, 40 to 60 would be nice if it would settle into that. Your standard fear gauges, gold and silver, are selling off. Even crypto sold, well, it bounced back up, so disregard. It was selling off earlier today. Back to, better than expected jobs report. We saw that. So here's the deal with interest rates is interest rates aren't the problem. The problem is the debt. So, and I think largely this is maybe a hangover from some of the Republicans. So the Republicans lost a highly contentious election and got very, very, very upset. People still think it was stolen. I don't care about any of that. But I will say the rallying cry for the Republicans since the election has been lost is inflation and all the spending. Well, Republicans throwing spending spears is pretty funny. Every politician spends, right? So come on. But they're saying the specter of inflation. Well, if you keep saying it, you might get people to believe it. That's what the media does, right? So everybody thinks this inflation's coming, but the conditions are not there for it. 2007 and 2009, we had massive quantitative easing. Did not happen. Inflation did not happen. We have a Fed chair right now saying that it's going to stay low for the next 3 years. The bigger problem out there is the debt. So if you want to squawk about something, squawk about the debt. And what are we going to do about that? Nobody likes to talk about that because the answer is raise tax, right? You don't want to hear that. But the problem is the debt. But the debt also holds inflation rates down because we can't afford to pay the interest if the interest rates go up. So don't even think we're going to see any huge increase in interest rates that won't be absolutely slayed by the US government because of the interest we have to pay on our national debt. So interest rates are going to stay low. So I don't buy this bump in interest rates. If anything, it's going to be for a little bit. Okay, let's take it a few names here. We'll skip over that, but I did want to show you this, keeping things in perspective. Apple was at 79 in June. It's at 120 now. That's called a 50% increase gain, right? So stop sweating that it was up here at 40 and now you haven't lost all this money. Like, look at that gain, right? Unless you started your investing career 2 weeks ago, don't sweat it. There are some very good numbers down here. I'll show you some better numbers here in Amazon. Amazon down here at 2,400. It was at 1,500 in the bottom of COVID. You just cracked down below 3,000. I think it's a clear buy. Do your own due diligence. You want to see some good numbers? I don't know. Look at these earnings per shares numbers. You think this company's crushing it in the middle of a pandemic? If you get spooked and say, hey, I want to go to cash, that means, hey, Steve, I want to sell Amazon in the middle of a pandemic. Don't make me sell your Amazon in the middle of a pandemic. This company is kicking butt and it's going to continue. Stock price is lower. So what? Don't cry, buy more, right? Salesforce, another one that I like here at this point, has sold off hard after these huge earnings beat, 6 months ago. It's going to come back. in my opinion. So clean energy also been hit hard lately. Up at 90, it's down now in the mid 60s. You know, that's 20-30% sell off. Don't give up on clean energy. Think that's a theme going forward? Yeah, that's like a no-brainer theme going forward, right? Clean energy. So just buy some more while you're here. It's at 65 a share. Load up, and no big deal. Actually, be happy about it that you're buying more, right? Even if you bought more last week at 75, buy more at 65. Add up. It's a good place to have money. I'll show you another one. Grid is your infrastructure play. Somebody else in the room also threw out Pave. Pave is a little more focused. I would say Grid's a little better, but it's up to you. I think both are going to do fine. Just sold off hard in the sell-off. For what reason? You don't think there's an infrastructure bill coming? You don't think we're going to upgrade the infrastructure in this company, especially after Texas just got hammered? Yeah, natural disasters will happen. We are going to upgrade the infrastructure. It's a feel good for politicians on both sides to spend money on upgrading our stuff, and we need to, and you know that. So let's put some money into Grid, is my opinion. Last one I'll show you is Palantir, PLTR. The ultimate greed stock, I call it. What's going on in Palantir? Why? Well, it dropped from 40 down to 25. I'm like, okay, how about I give you some numbers? It opened at 10 in October, and now it's at 25. You still think there's something wrong with it? No, it just got in front of itself. It sold off, and now it's coming back in. So big picture, if you're getting excited about your stocks, zoom out and take a look at the bigger picture. All right, let's go over to TD Ameritrade, excuse me. Voice is doing a little bit better. I still can't scream from the rooftops here, but get ready for the market open. Again, I've got two longs in GWAC. GWAC is your long. So just put that in there. This will be my number one for the day. GWAC is a SPAC. You can buy it now. Yeah, it's 10 seconds to open, so don't buy it now. Welcome everyone to the on time on target play of the day. We have 3 seconds to the market open. There it is. I have the SPY on a 1-minute chart right here. The futures are up almost 1%. You have GWAC right here. This is a Bitcoin or a crypto company, crypto mining company that is opening with a special purpose acquisition company. I'm going to take it here pretty quick because I think it's just going to go higher. Let's take it at 1140. If you get a better entry there, then do it. You can take it here at 1135, but I call it 1140. You're going to have to give it a pretty big stop. So give it down to 1110 will be a 30-cent stop for us today. That moved on me. 1110 is our stop. So you can still buy it here. 1140 again, we're going long on GWAC. So a special purpose acquisition company bought this company yesterday, or announced that they're going to. Let me toggle over. So there's what's going on. So bidding out, there's always a chance it fails. So get in there at 1110 in case it does. So the name of this company that bought this crypto mining company is, I'm off on another screen. I have it written down here. SPAC, GWAC is the name. GWAC. Good Works Acquisition. So a standard throwaway SPAC name. Blank check company, if you will, to come in and buy this. In crypto mining, crypto mining, it's a private company. This is US based. You don't know it. I'm saying that the theme behind it is almost bulletproof, right? So, the SPACs, some of them have failed lately, and you have to be concerned about that. But I think this one is positioned to go much higher. So we're in that trade, 1140. Rarely do I take something that fast unless I have a lot of conviction in it. All right, a couple of shorts we're going to take a look at. It wasn't quite set up where I wanted to be. Norwegian Cruise Line has issued like millions more shares of stock. It's like, okay, it was going up because people believe that cruise lines are going to do better, but they got greedy, right? And they issued a bunch of stock. I think that's just going to hammer their stock there. They didn't even issue it. They announced that they're going to issue it because they have to ahead of time. And in space, Virgin Galactic has been in trouble lately. A lot of big sellers. The CEO sold to like 10%, maybe 5% of the stock. And then Chamath, which I still don't know how to say it, Palapatia, maybe. The hedge fund manager turned going to run for governor of California and probably win, I think, on a common sense platform. He sold a bunch of his shares. Now, I think he's cleaning out his shares because he's going to get into politics. So he can't hold a lot of this stuff, or he'll get heat for holding a lot of this stuff. So we shall see. But both these companies, you see the market still powering up pretty good. But these are both your shorts for the day. All right, we'll keep an eye on GWAC. Again, we need to hold the 1110 level. I gave it a little buffer from 1126, which was the low of the day. So really don't want to see it go below 1120. I guess it's 25. Really don't want to see it go below that. If it does, I could see us getting busted out. But if it holds that, then we're safe in the trade. All right, let's take a look at some of the other names we had on here. Chuy's Holdings. Again, this is the restaurant and of Chuy's and others. So there it did bust below. So now you got to hold your breath and just ready to get out at 11:10. Don't turn around and turn this into a trade, but this is a name you may look at picking it because you'll have too much, right? If you're having an R unit, at 30 cents, you might have picked up, 1,000 shares of this stuff. That's a 300 R. That's not an investment, right? You might want a lot lower holding for your investment. So don't get the two confused. Don't just hold it because you want to turn it into an investment. Okay, so Chuy's is up. Let's check out some of the bigger names here. Apple. I thought Apple would be up more. Pretty surprised. Let's look at Amazon. Apple's buying back stock hand over fist off of this news. Amazon's not even moving up. Let's look at CRM. CRM bouncing some. I bought some last night for some portfolios out there. I was intending on buying more today. I don't need to. If we get if it's a straight up Friday, then I'm not going to buy more. I'll wait to see if Monday comes back or not. But if you got some, you got a good entry point down here in the low 200s. I was trying to hold out for 200, but I never did get it yesterday. Okay. And then we saw Luckin Coffee. We'll put it in over here to the right. Was 5% in the green, 6% in the green. So nice little bounce for Luckin there. All right. There it hit our stop. So we are out right at our actual stop. So busted trade. And that's too bad because I was very optimistic, as you know, on this one. And it's so mad at me, it's not even letting me draw on here. So normally I give myself a big red X, and we're out of that trade. We'll check back on it. Again, if you cheated a little bit and went down here to like 1109, you might still be in it, but don't cheat. All right, let's look around the world. So Luckin, top of the leaderboard. That's, of course, a call, if you will. Iconic brand. Can't remember what they do. Small firm here, GBTC, that's Bitcoin. So Bitcoin on the way up. Energy's been getting some love in this. The tech sell-off has been kind of a resurgence of energy. So if you got an energy company like Chevron, Valero, if you're still hanging in there with BP, I think now would be a time to lighten up on those. Do what you think. There's the CRM bouncing around. There it is. Bank of America. Should you buy into banks here? I would say no. If you really look at where the banks have been, I mean, I love JP Morgan. I consider them best of breed. But when you zoom out, I think the money's been made. So you're down here. JP Morgan went sideways forever. Down at 100, and then it's put on 50% since the election. Yeah, even if you do think, hey, I don't believe you, Steve. I do think rates are going to be increasing to the moon. So I want to be in banks. I don't know. That's pretty tough. To look at kind of a cute local name, local to Ohio, LCNB. Lebanon Citizens has gotten crazy, right? It touched 18 a couple of times. There appears to be a seller there at 18. Yeah, kind of crazy what's going on in the bank. So Bank of America is the one that's up today. I wouldn't necessarily go into banks based off of this. I mean, they were at 24, now they're at 37. So 23, 36, that's 55%. So you don't need to be buying into those here, in my opinion. They just don't have the upside. So you throw a name out for you. Hey, there's one. That's what's going to get my money, is good old Apple. All right, let's see what's going to the downside here. Maybe. Okay. Maybe not. We have two ways to skin this cat. So the leaderboard's down at the bottom now. Sorry about the technological issues. So you got Clickstream, the biggest loser, Fubo TV, CRISPR, excuse me, Shopify on the way down, Palantir on the way down, Nikola, DraftKings has been on fire. So I'm actually kind of glad to see it come in a little bit. You do not want your stocks to go straight up forever. I did sell some Blackstone the other day. And somebody questioned about, like, do you hate Blackstone now? If I sell something in your portfolio, I generally just like something else better. If I hated the name, it wouldn't be in your portfolio, right? I have like several thousand stocks I hate, none of which are in your portfolio. So if it's in your portfolio, it means I believe in it. But when stuff's coming up or I want to buy Salesforce, I got to find the money from somewhere. So that's why, that's generally why I'm selling something. Okay, let's see how we're doing. Yeah, it bounced right off of that exact point and went back up. So, all right, we're going to go back to the main screen now and talk about interest rates. So bonds and interest rates. So we talked about how it affects the market. I don't think that shared out correctly. There we go. Now I know it shared out correctly because I can see it. All right. So here's the scoop on bonds and how interest rate impacts bonds. If you're holding individual bonds, you don't care. You just don't care. If you've built out your bond ladder, you basically entered into a contract saying, I bought Macy's bond, it pays me 5%, and it's going to do that until 2027. And the only thing that ruins that is if the company goes bankrupt. I can no longer say I have not had a bond company go bankrupt. I did. I'm dealing with that right now. That is so painful to be able to have to tell clients, yes, you could lose your entire investment in the bond. I don't think that's the case. But when a company does go bankrupt, normally they get bought, right? When a company goes bankrupt, the common stock goes to zero and becomes worthless. They sell off all the assets in bankruptcy court. They put a determination on how much those assets are worth, and they turn around, they take their 33% lawyer fee, cry because that's your bond money, and then pay the bondholders the rest, right, of what's the salvage value, if you will. So we'll see. I have by March 26th to turn in everybody's paperwork. 4 or 5 people were affected. Not large amounts in relation to their portfolio, thank goodness, which is why you diversify. But on occasion, a company doesn't make it. But back to your bonds. If you have individual bonds in a ladder, all you have to worry about is those companies staying in business. And if they survived COVID, they're probably going to survive going forward. So if you have a bond fund like FIXD, which I know a lot of you do because that's where I hold cash, that has sold off. It has sold off like 3%, which is very uncommon. So you can be down money in a bond fund, and that's because of these rising interest rates. So you kind of have to hold through that and wait for this interest rate thing to drop back down and become a non-issue before you sell that position. But you do want to hold that through. You don't want to take that loss because usually those numbers are pretty big, to the tune of 6 figures, not the loss, but the size of the position, which means you lose percent of 100,000, that's 1,000 per percent. So you could be down $2,000 or $3,000 in your safe money fund, right? So just hold for now. That's going to correct, just like bonds did out of the big dip we had with COVID. So that's how interest rate affects bonds. So when interest rates increase, the bond fund, all of the bonds that are in that fund decrease in value, but they're buying and selling all the time. And that's why it affects it, versus you don't care about individual bonds. So, all right, enough bond math. Let's see how our Friday is going. All right, the NASDAQ's about even. S&P's up 0.5%, Dow's up 0.5%. So we're going to learn a lot about the next few weeks on how today acts. If the floor's in and we're having a nice green day, then I think there's, the worry's kind of off. If it does continue to break down through the weekend, then we'll see. We'll have to see what happens on Monday. So, all right, with that, I'm going to let you guys go. You have a good weekend, and I'm off quarantine on Monday. So almost through this. I'm on day 8 now of COVID. No fun. All right, we'll talk to you guys soon.